Hi everyone, this is Dimitri Pargamonik with MarketChameleon.com. I wanted to really quickly look at a scan with you using the synthetic long discount, stock discount. And before I do a scan, I just wanted to explain really quickly what this is. And in the options market, you could create a synthetic long stock by buying the call and selling the put on the same strike, which essentially creates a synthetic long. And in this scan over here, what we're looking for is discounts if you create a synthetic long to the spot price. So over here, here's the stock price, here's the synthetic long, and this would be the discount from the spot price. Now, there are a few reasons that this can exist. And for one is when you look at stocks, if you want to short a stock, the actual stock, by regulation, you first have to go and borrow it. And after you borrow it, you could sell it short. So you have to find a broker willing to lend you the stock before you could sell it short. Now, if a stock becomes hard to borrow, the fee to borrow goes up. So you'll actually have to pay a broker to borrow the stock to sell it short, especially if there's not a lot available to sell short, if there's a low float, or if there's a high demand to sell short in the market. That stock loan fee will start increasing more and more as the demand to borrow the stock increases. Now, since you could also create a synthetic short in the options market by buying puts, selling calls, that fee will also be reflected in the options market because otherwise there'd be a big arbitrage, right? You would be able to create the short in the synthetic market, get the stock and lend it out and make a fee. So basically the options market starts to reflect hard to borrow rates that are going in between the intermarket dealers from brokers lending the stock out to each other. And that could tell you a few things, right? Either that there's a high demand to short a stock and you might want to take a look at it. There might be a special situation temporarily. People want to sell short a stock. Or it's possible it's just a low flow. It's hard to borrow and it could be an opportunity to get long something that you might want to be long at a discount to the spot price. Like over here, we see, some of these discounts could be pretty significant when you compare them to the spot price. So let's just do a quick scan here. You could do, stocks in your watch list by market cap. And over here, if it has a dividend or not, that's another thing. You want to take a look if there's a special dividend in there that is being priced in by the market because there's an unknown. It'll also look like a hard to borrow potential if you have that dividend mispriced. So let's just take a look at all these are 721 different hard to borrow situations we found that are at least 1% or more discount. And let's just look for best discounts by symbol over here. This is going to now give us for the symbols that have a discount, it's just going to find us one with the highest discount. So you could see over here for each symbol, we have a discount here. This is the expiration month. This will be days to expiration. Here's the strike price, and here's the synthetic bid and offer. So the synthetic bid, you could see a call bid, put ask, synthetic offer, call ask, put bid. That would be the spread in the synthetic. So you want to pay attention to that. If it's very wide, you might want to, and you want to do a trade in the synthetic, the conversion reversal, you want to get it as close to the midpoint as possible because that's your fee once you pay that spread. So over here, you could just kind of go through it, scan if you want to do sort by market cap. You could sort by highest synthetic discount, or look up any particular symbol. If right now there's a discount or not, you could look it up that way. Also, you could just look for best discount by the symbol and expiration. So it'll give you the symbol, and for each expiration, if there's a discount, which one is right now at the highest discount. So hopefully this was helpful, and see you guys in the next video.